Welcome to the Life Insurance Financial Education Podcast. We're pulling back the curtain on high cash value life insurance, revealing its role in a comprehensive financial strategy to help you build wealth and achieve your financial goals. I'm James Barber, your Oregon Cash Flow Pro.
Hi, Jing Wan from Tax Exempt Millionaire Club.
Hello, and I'm Carlo Vaquera with Net Wealth Finance.
And today we're going to be talking about the benefits of high cash value life insurance. Specifically, we're going to talk about whole life insurance and IUL and the benefits of each one and where they overlap. Now, this episode is going to have a visual. You don't have to see the visual if you're just listening to it on a podcast. But if you want to see the visual, check out one of our video feeds. Check for the links to those in the description. So today we're going to be talking about the benefits of specially designed high cash value life insurance. I'm going to be the consumer, and Carlo is going to tell me why I should be getting whole life or what might appeal to me as a whole life consumer. And Jing is going to tell me about IUL and all the great things about IUL, the especially high cash value designed IUL. So Carlo, kick us off. Why would I buy a whole life insurance policy?
One of the major advantages that I see with whole life is fixed premiums throughout the policy's life. So that means that when you buy a whole life policy, you're going to have a premium that will be paid up at policy maturity, and your policy will have that fixed premium. That cost is not going to grow in any way for that base whole life policy. And that's a real advantage compared to really any other life insurance product. This whole life is the only one that really has that fixed premium through the policy's life.
Oh, so I can definitely see the benefits in knowing what I'm going to have to pay, not just now, but also 40, 50 years in the future. So I can plan for that. Awesome.
Absolutely.
Jing, how about in the IUL side?
IUL stands for Index Universal Life. Universal Life, the underneath design is a ART, annual renewable term, but it is a permanent policy. Because of its universal life, you will have flexible premium. You probably will have good years, bad years, but it has a range you can pick if you want to heavily fund this year to get the growth upfront, versus if you have some other years you want to fund the minimum, you can do that as well. Who doesn't like flexibility?
Essentially, what you're saying is if I have the ability to fund it at the expected level or a really high level, I can do that. And if I encounter financial emergencies, I can reduce what I'm putting into it in any given year, maybe even not pay anything.
Definitely. It could be possible. The flexibility is definitely there.
All right, that sounds pretty appealing. How about the death benefits? Carlo.
With whole life, what you have is a guaranteed death benefit. Now, I mean, earlier I had said policy premiums fixed throughout the policy life, and term policies have that, but they end with a term, and whatever that term is, once it's expired, you're going to have a jump in the costs. But with whole life, it's really guaranteed death benefit for your life. And so you will have that death benefit as long as you pay your premiums. That is a guaranteed death benefit.
So as a life insurance consumer, I get really good peace of mind that I know that death benefit is going to be there when I die. And so far, nobody's figured out how to not do that yet. So if life insurance is my goal at some point in the future, so I can pass on a death benefit to my beneficiaries, I get some pretty good guarantees with the whole life product. Jing, what is available in the IUL space as far as the death benefit goes? Is it the same as the whole life?
It's almost the same. The death benefit can vary based on the policy design as well as the policy performance.
So you say based on design and policy performance, it can vary. What are the different types of death benefits based on the design?
There are two main death benefit design. One is option A, which is the level death benefit. The other one is option B, which is increasing death benefit.
Okay, so what you're saying is that there's a level death benefit option and an increasing death benefit option. Is there any other variations on that?
There's also return on premium options, and then different company may have different variations of the death benefit options. That's sometimes called option C.
Wow, so there's a lot of different choices. with the IUL. It's a good thing that you guys know about this stuff so that you can properly advise me on what I might need. Thanks for sharing that about the IUL. Carlo, what can you tell me about whole life and what I might expect as far as crediting goes?
So one of the major advantages in whole life is the guaranteed crediting that you have. A few years ago, the guarantees used to be at 4%, and with policy changes, they are now required to be between 2% and 3.75. And carriers have some flexibility in what they choose to offer in terms of guarantees. So it is a really great advantage. There's not many things in life that are guaranteed, but having some guaranteed crediting is a nice advantage and benefit of whole life.
So some products have a 2% guarantee, some have a 3, some have a 3.75.
Yes, correct.
That sounds like a pretty good deal. What about the IUL?
IUL is based on the stock market index. Remember, your money is not in the stock market. That's very important. Basically, because it's linked to the index, your potential crediting or potential growth is higher.
Excellent. So, like, what type of high credit potential are we talking?
Well, as far as we can see, your crediting can be 10%, even 50% and plus. So we're talking about big numbers here.
Wow, that is some pretty high potential. What's the likelihood that I might get that?
Well, we cannot guarantee you will see that kind of performance, but we do see that happen in the past.
That's pretty cool. And Carlo, what's the growth like in the whole life space?
So I mentioned earlier we have that guaranteed crediting rate, but there's also a dividend that is on top of that, or it might be called a surplus dividend. So most of these whole life carriers, well, the ones that we work with have all paid dividends in excess of that guaranteed crediting rate. And it's not to say that that's going to always happen, but so this portion is not guaranteed, but that dividend has been strong, and the carriers that we like to use have strong histories of paying dividends for over a century. You can feel pretty confident that that will be the case when working with these carriers that we like.
So, as a policy owner in the mutual company, I am an actual owner of that company, right?
That's correct.
And the dividends are based on the profitability of that company. So, the investments that they're making with the general fund and hitting their actuarial targets, making good guesses.
Yes, exactly. These insurance companies are about numbers and calculations. And when those calculations are particularly successful and they are making excess funds, they pay that to their policyholders who are owners of the company. That is a real good advantage of the whole life policyholders.
And what would be the benefits of the IUL side and how growth happens in that product?
For IUL, the growth is linked to the stock market indexes. There are a number of options to choose from. Some are capped, some uncapped. There might be some bonuses you could choose as well. It reflects to the flexibility we were talking about. There's not only flexibility on the premium, there's also flexibility on choosing different indexes and options.
If I'm a savvy investor and I know about the stock market, I might have more control over my potential growth in an IUL. Is that what you're telling me?
Yes, definitely, because the growth of the policy is linked to the index of the stock market. If you're really stock savvy, you can definitely make some adjustment based on the market conditions.
Now, what if I'm not a savvy stock market investor? Still a good choice for me?
Definitely. Actually, a number of those indexes are set for set it and forget it. You don't need to actively managing it.
So there's a lot of them that'll work well if I just let it go. I don't need to manage it year to year.
Yes, definitely.
Okay, good.
When we mentioned there's multiple index options available to people like you, there's also fixed interest available if you don't want to manage any of that. So there's a lot of flexibility.
So if I didn't want to have everything allocated into the index options, I can get a fixed interest crediting rate.
Yes, definitely.
So Carlo, this IUL is sounding pretty good. What's your pitch here for the whole life? What do I need to think about on the whole life side?
Generally, one of the main advantages of whole life when somebody's just trying to think about something to get into is there's not a lot to understand. It is simple. The whole life policy, you pay your premium in, they put your money and your premiums into secure investments. and you're going to have a death benefit. So it's pretty straightforward. You're going to have something very simple. Now, those conservative investments, those secure investments, we're talking about very, very secure investments, corporate bonds, municipal bonds, very high rated investment grade things that are going to pay a yield of some sort. And that yield is what gets credited in your policy or to the general account. And then the insurance company will pay that out. So very secure investments in whole life. And also that leads to it being a simpler product as it pertains to you.
So I don't have to play around with the index options. I don't have to think about what the stock market might be doing. It's just going to do what it's going to do.
Yes, you generally don't even have the option to do anything else. Now, there are exceptions, but you buy the policy and it is what it is, and you'll just get the crediting and the dividends as the whole life company gives them to you.
So it's like Old Faithful, just going to keep working year after year, year after year, regardless if I do anything with it or not, other than making sure I make the payment.
Yep, absolutely. One really major advantage with whole life in general is that it's not correlated to the stock market. When the markets are going down, so let's talk about 2008, whole life is still going to give you a credit in a financial crisis, and they continue to pay those dividends. So you can know that you're going to have secure growth inside of a policy, no matter what's happening with the real estate market or the stock market. And that's a real advantage, having that security, knowing that you're going to have an asset that will credit you when everything else is going down.
So when real estate was losing value, stocks were losing value, bonds were losing value, all of this happening at the same time in 2008, because this product isn't correlated to that, I don't have to worry. It's kind of like a safe haven in the storm.
Exactly. So many times in our history that whole life has continued to pay dividends through various financial challenges that impacted pretty much every other asset.
That sounds pretty attractive. Jing, what can you tell me in the IUL space?
For IUL, although your performance is related to the index, but you will not experience the downside of the stock market at all. That's how the insurance company guarantee the downside protection for your policy.
Because I'm not actually in the market.
Exactly. Your money is not inside of the stock market. It's still in the general account of the insurance carrier.
So I can participate in the upside, but if the stock market is losing money, I'm guaranteed to be flat. I think they say zero is my hero. I hear that phrase often.
Definitely, zero is your hero.
When we can avoid those 0 years, it saves us from having to recover that period where we've lost money and you got to get it recovered before you can start making money. So we've got that downside protection. Zero is my hero. And if there is a negative year, we have what's called the annual reset, where I'm going to start off my next annual point to point of wherever the index is. So I could potentially not having participated in the downside, but I do get to participate in that recovery.
Definitely. Yes.
That sounds like a pretty good deal. Tell me a little bit about some of the bonus crediting options that might be available as well.
For bonus credit options, we actually have several different choices. For example, the IUL policy I own, I have 3 different options to choose from. We could have fixed bonus options. We can have multipliers. There's several choices you could pick from.
So it sounds like depending on the product, I might have different bonus options that are available to me that could increase the credit that I'm getting. Now, are they guaranteed or non-guaranteed?
Different carriers will give you different options. Some actually are guaranteed, some are not guaranteed.
Oh, excellent. Now, this one is for both of you guys. I've heard that I get tax benefits if I'm buying life insurance. What can you tell me about that?
When we pay premiums generally into a whole life or IUL, we're using post-tax dollars. So with that, the death benefit in life insurance is income tax free. So we can have this tax deferred growth inside of our policies. And we'll talk about it a bit more later where we can access that even, but the death benefit passes income tax free. And so that's really just a general advantage of life insurance that you have.
And that works both whole life and IUL, that we get that tax deferred cash value growth and a tax-free death benefit?
Exactly. When it comes to tax, no matter if it's IUL or whole life, it's the same tax benefit for both.
Excellent. Carlo, you mentioned something about accessing that cash value and there might be some tax benefits there.
Yes, so that is probably one of the primary reasons why I got into this whole concept, and I think why a lot of us get into this business. And one of the main advantages that life insurance products have is we can use them as our line of credit for funding investments outside of the policies, whether that's entrepreneurship ventures or real estate investment. There's so many ways that we can use our cash value inside of our life insurance policies. And really, there's no comparison with what you can do inside of a life insurance product because we can generally access high 90%, even more of our cash value inside of whole life or an IUL policy and borrow against that to fund different ventures that we might want to engage in.
And it's the same for IUL policy as well. That's why we all use the cash value as our potential line of credit. We borrow the money out to use for investment. And then if we have extra money, you can just pay the loan back.
Wow. So the cash value works like a line of credit and it's going to grow when I put money into these policies. So essentially, I control how big this line of credit is going to get. Is that what you're telling me?
Well, yes, we design these to maximize the amount of cash that we can put in. And that's really the goal is to build that line of credit as big as possible. You know, my goal is to have my line of credit be in the millions at some point within my life insurance policies. So it is a real advantage. And we can grow this line of credit pretty much as how we design the policy. It can become a very big line of credit for us to use for all of our ventures.
That sounds incredible. What's the downside here? What happens if I borrow too much money? I mean, can I screw this up?
There are some carriers, and actually both of my policies have this. There's something called an overloan protection rider. So if you borrow too much from your policy, there is the potential for a lapse. But with an overloan protection rider, you are protected from that, and it will automatically stop and just keep the minimum amount of death benefit in place so that you don't get hit with a tax bill for accessing all of those gains that you had in your policy.
Oh, interesting. And is that just in whole life or is it IUL? What's the?
Yes, it's the same for IUL as well. Some carrier will offer that, which is super important.
So some carriers don't offer the overloan protection rider? That sounds like something I need to be aware of. Do I need the overloan protection rider?
For all IUL carriers, they all offer this overloan protection rider, but some of them may not offer in particular design.
Gotcha.
On the whole life side, it is less common to have an overloan protection rider. I think due to the secure nature of how whole life operates, it is less common. So if it is something that you're absolutely wanting to have, definitely reach out to us, have a conversation with one of us, and we can point you in the right direction if that is a requirement for you.
That sounds like something I might need to be aware of, whether I get that overloan protection rider or not. What I sometimes hear people talk about the possibility that I can borrow and maybe I can make more than it costs me to borrow in some of these products. What can you tell me about that?
There is a concept when you borrow at a rate that is lower than the rate that those funds are earning, we call that arbitrage. That's the difference between those. In a whole life policy, it is possible when you have a non-direct recognition. So non-direct recognition means they don't recognize or they don't change anything when you borrow against your policy. So the dividend you will continue to earn no matter what, even if you have loan against the funds in that policy. So it is possible that you're borrowing at a rate that is lower than the rate that the carrier is paying. So that is one way you can get arbitrage in a whole life policy. Another way is if there's a low interest rate environment, you might get a insurance-backed line of credit from a bank that is going to charge you a lower rate than the dividend that the insurance carrier is paying.
With IUL, arbitrage is highly possible with participating index loan.
And the participating index loan, that means that the insurance company is going to ignore that I have a loan. Like all my credit is still going to be based on the index growth. That I have a loan outstanding is not going to affect the growth in the policy. Is that right?
Yes. And then as long as your index is higher than this interest they are charging, you definitely have an arbitrage there.
Excellent. If the cost to borrow is 5%, if I earn more than 5% in the index, I'm making money on those dollars inside the policy, regardless of what I did with the dollars that I borrowed.
That's why we said it's highly possible for IUL policies.
Yeah, and if I'm borrowing that to go invest them somewhere else, that just adds to the possibility of what I can do with these funds.
Exactly. That's what I was doing. Just say if this year my participating index is 8%, my interest is 5%, there's 3% arbitrage right there. If my real estate portfolio can give me cash on cash 15%, then in total, my money is at 18% working for me.
Excellent. So to wrap this up, Carlo, give me your best pitch for a whole life.
So really, the whole life, for me personally, it takes the place of what I might otherwise have in a bond instrument. It also reduces what I have in high yield savings. I think it is a great place to store an emergency fund because of all of these guarantees that you have in whole life and the simplicity of having that shielding from the markets and having credits even in down markets. It's a really great advantage for whole life. And I think it works for a lot of folks that are really looking for a secure crediting product.
And Jing, give me your final pitch on the IUL.
I will go through 3 points. One is flexibility of the premium we were talking about. And the second is the highest potential of your death benefit. And the third one is the high possibility of your loan arbitrage. You really want the money working for you. With that flexibility, you can pull the money out, do real estate investment, business buy and sell, and then you can return the money and that money grow for you. So IUL can give you that permanent life insurance, the flexibility, and also with the money working for you.
Excellent. Excellent. I'm going to take off my consumer hat and just say I am a big fan of whole life and IUL. I think you guys did a good job of highlighting the benefits of both of those. Carlo, I know you own both. I own both. I love both. Jing, you currently own an IUL, and I think you have plans to expand your life insurance product ownership into the whole life space at some point. So I think it's safe to say that each one has their place, depending on what you're trying to do. Would you agree?
We agree.
Yeah, I mean, I think that it comes down to what is a person's goals initially, what kind of financial foundation they're looking to have. For me, I wanted to have a bit of both. I see advantages in both of these products. So when we look to assess a particular person's situation, it really, one or the other might fit their situation more. And that might just be where they start. And then they expand into another product a little bit later on. I think that both of these have a place for most people. Contrary to what a lot of folks, there's a lot of folks out there that say these things are not for everybody, but I really do feel like they can be for most people who are looking to build a solid financial foundation.
Good points. That leads us into what next week's topic is going to be. So make sure to join us for next week. We are going to talk about the comparisons between these two and what might be the appropriate situations where you might choose whole life or IUL to help fit your financial needs and meet your financial goals. So be sure and join us then. I'm James Barber, your Oregon Cash Flow Pro. I'm licensed across the country for life insurance and annuities. You can find me on YouTube at Oregon Cash Flow Pro.
This is Jane. I'm the host of Tax Exempt Millionaire Club at School Community. You can find me there with daily posts, some shares I want to post to our group members, and I'm also licensed in multiple states.
And again, I'm Carlo Vaquera. You can find me at netwealthfinance.com or on the YouTube channel Sapnin, so SHAPNIN. And we post various things, but a lot of stuff around life insurance and the concept that we call net wealth finance.
And that's a wrap. We'll see you guys next time.
See you next time.